Hello, ladies and gentlemen. Welcome to the show. Listen, I'm glad to have you guys here on the Monday, the 11th of May, 2020. Now, listen, here's the thing. Over in Europe, the European Central Bank is not like the American Central Bank, the Federal Reserve. You know, the Federal Reserve, you guys know I don't like the Federal Reserve. And I don't believe that we should have ever had a central bank. But our central bank over here in the Americas runs so much more efficiently than the European Central Bank. It's like night and day. The European Central Bank, I'm telling you, we're facing an unprecedented crisis that's coming up in the next few months. And the European Central Bank doesn't function well. Just the way it's structured. The whole Euro project from its origins, it wasn't structured properly to begin with. The Euro, the currency of the Euro itself was not structured properly. Some countries were weaker. Germany was a strong country, had a lot of money behind them, they were savers in Germany, And these other countries like Italy, Spain, Portugal, they all joined the Euro and they all had a common currency, but the countries weren't equal to begin with, where they were going to give them all an equal currency. In other words, Germany opened their pocketbook. It's almost like if you had a family, to explain it to you guys, you had a family, and say the father and the mother were very careful with their money, and they were savers and they were careful about their spending or anything, and say they had a teenage daughter and a couple kids that were just like, completely crazy with the money. But say that they gave them all a credit card, but it's all tied in, so the parents would have to pay for whatever. And say the teenage girl went out and spent to the limit of her credit card more than the parents could afford. This is the way the Euro is set up, with these other countries like Spain, Portugal, Italy, being like the teenage daughter who spent too much money, and the parents being like Germany, the savers. But now the whole thing, because it's all structured wrong to begin with, and we're having this huge crisis in the world, we got systematic problems within the financial system that are going to need to be bailed out. I'm not going to put any other term other than bailed out. Now, in the United States, if we have banks start to go down, the Fed is there. They don't have anything to stop them because they're unified in their efforts to. They can just decide overnight, okay, we're going to bail out such a corporation or we're going to bail out such a bank, and there's no having to go to court or anything like that. You know what I mean? Let's open the charts up and I'll show you what I mean. Let's start the charts right here and let's take a look at this. First big problem we got over there is Germany's biggest bank. They sold their capital before, to try to boost their capital allocations, and now they're doing it again. They're selling their bonds to boost capital, as a recession is looming over them. And, they're slowly but surely, they're sinking. Germany's biggest bank is slowly but surely sinking. It's cost them a tremendous amount of money to do all these restructurings that they've done. A deep restructuring, it says, that they did to the bank. And they already dipped into its capital reserves before the crisis to pay for this deep restructuring. Okay. They're really running out of money. They're having to sell their capital, selling their bonds to boost their capital allocations. Let's take a look today at Germany's biggest bank right here. We can see that they're slowly sinking. They're down 2.63% today alone. Now, take a look here. This nightmare, they call it a nightmare. In the latest European freak show, the EU threatens to sue Germany over a quantitative easing ruling. You know, if you got too much of this going on, where one team over here, say the European Union, and Germany over here, and they're all quibbling back and forth. Oh, we can't spend this or we can't spend that. I'm going to take you to court, and they can't get anything done. So if something like Germany's biggest bank starts to really fail or something, they'll all be fighting over whether they can bail it out or not. And while they're fighting over it, the world could be collapsing. Whereas in America, with the Federal Reserve, there's no fighting about it. The Federal Reserve convenes a meeting in the middle of the night, and the next day they come out and announce what they're going to do. It's straightforward. But over there in the European Union, it's not straightforward at all. All these countries, different countries, all have a different idea about what they want to get done and whether it's legal or not, and they can fight over it for months. Meanwhile, the European Union could be sinking and carrying the rest of the world down with it, especially if Germany's biggest bank goes down, Deutsche Bank. That's all we would need right now. That's all we would need in the middle of what we're all going through right now in the whole world is for Deutsche Bank to sink. That would be like, you know, that would be like a bunch of survivors in a lifeboat, and they throw a guy throws an anchor in the middle of the lifeboat and goes through the floor, and all the water comes pouring up. I mean, it just goes beyond unreal. Let's take a look now at the silver price today. 15.40 for silver today. It's down 8 cents on the day. With all this turmoil going on, with all this financial uncertainty going on, silver and gold should be going through the roof as a safe haven asset. Really, and things are not getting better right now. Things might get better a few months down the road, but look at what's happening right now with all of this. Open your eyes and see. They did this big thing where everybody had to stay home. Yeah, and it slowed down the spread of the virus. Okay, but now they can't do that any longer. The economy's going downhill too fast. We're all going to starve to death if we all stay home. So they're going to open parts of the economy back up. Well, the virus is just waiting. So what I think we're going to see is, I think that we saw the first wave come in, and the first wave was getting ready to start to taper off, and we were going to see a decrease in the amount of new virus cases. That's what we were going to see. But now that they're opening everything back up, I don't think we're going to see that decrease anymore. I think it's going to go along the way it's been going along, with new cases every day, because they're opening things back up. And eventually we will see a decrease. But I think we got a few more months yet of having to plod through this situation. And I think it's more than the economy can bear. I think that ultimately what it's going to lead to is it's slowly but surely breaking the economy to pieces. But we do, like I say, we do have a Fed in there that's supporting the markets. But all this support for the markets and everything is creating a tug of war between deflation and inflation right now. We got this tug of war going on. Nobody really knows which side's going to win. I've been sitting around listening to these guys over the past few days. I mean, probably 8 hours a day of my time I'm spending sitting listening to these financial analysts in their argument over which side's going to win, deflation or inflation. And a lot of them describe it like a tug of war, going on right now in real time between deflation and inflation. And this is very important for the gold and silver investor to know this, to know which one's going to win. So I've been sitting there thinking about this a lot, and my biggest conclusion is that the deflationary pressures that are coming on are very, very powerful. Indeed, very, very powerful. 20 million people to a time losing their jobs. I think it's over 30 million people losing their jobs. If that's not deflationary, I don't know what is. All these small businesses out there, small retail stores, restaurants and everything closing down, that's super deflationary. Everybody's scared out there. Everybody is saving their money. super deflationary. But you got to understand that the ultimate conclusion of a deflation is to completely and utterly destroy the economy, and ultimately it would lead to civil unrest. It would lead to chaos, and everything would completely stop. So there's going to be a point where the central bank's not going to allow that to happen. They're going to increase and keep exponentially increasing the amount of money that they filter into the system to keep everything up and running. They have to. And that's going to create inflationary pressures. And they, go back and listen to what uh, Ben Bernanke had to say and why he got the name Helicopter Ben. He said, if we have to defeat deflation, we will fly over in helicopters and dump $100 bills out the window. And that would do it, boys. That would do it. Just free direct monetization to the system. I mean, they could, quite literally, they could open up a storefront where they're giving away free money to anybody who comes in the door. And they could just bring it in Briggs trucks, big stacks and stacks of it, and open one of those up in every city. And what would that do to the dollar? For all these people out there who are hoarding dollars, thinking, hey, the dollar's going to be the big thing because this deflation's going to win and the dollar's going to go up in value, you better think twice, because they can create as many of those suckers as they want. They got a print and press, and they can use it. And they've already told us what they'll do ultimately to defeat deflation. And so sooner or later, the inflation monster is going to win. And sooner or later, we're going to see negative, 0 or negative interest rates. We might see as low as 3-4% negative, And this is a total economy killer. Well, let's take a look now at the Bitcoin prices today. 242 billion, 67.5% Bitcoin dominance. And guess what, guys? Guess what? I think this is just put in a bottom. See, it went up over $10,000, Bitcoin did. And now it's settled back down to 8,800. I think it put in a bottom. I think we see it right here on the chart. This little boom, boom, I think that's put in a bottom. And so I think what we're going to see is Bitcoin price. I think it is going to break through $10,000 pretty soon. Let's take a look at the Dow Jones today. Down 64 points on the day. 24,267. Now, I'll tell you about this market, what I think. My personal opinion is on the Dow Jones. I think we're in for more pain. I think we started the bear market with that big slide off. We went down to like 18,000. And now they've bounced it back to 24,000. We were almost up to 30,000. I think did we break 30,000? Almost up to 30,000, okay? It went all the way down to like 18,000. Now we're back up to 24,000 again. That was the start of the bear market when it went down to 18,000, right? What we're seeing right here is a bounce in a bear market. We're seeing a bounce back. And what this resembles on charts, for people who do chart analysis, this is not expected. This unexpected, I should say. This bounce back is not unexpected. You can get this in a bear market. This is a feel-good rally. It makes you feel like the market's going back to it. This is what the market does before it takes the real big down push, before the real drop, It's called a dead cat bounce. That's what it's called, a dead cat bounce. That's what we're in right now. I think we're in the dead cat bounce. And I think what's coming, is going to come also with the realization that we're going to see continuing problems with this virus. And the economy, the real strength of the economy has been all sucked out with all these job losses. And when that realization really dawns on them, I think we're going to start to retest the lows, I think that the Fed, though, has put a put in. at 18,000. So when we go down into the 17s or 16s, you're going to see the Fed come out with big, enormous new stimulus programs or whatever. More money printing and on a monster scale. And then I think you'll see this market bounce again. And we're going through this process, you know. It has to work itself out, and it takes time. Let's take a look now at crude oil. Crude oil, $24.53. It's down 21 cents on the day. And now let's take a look at the U.S. dollar index, not the dollar index, but the U.S. treasuries today. And we see rising yields. You know, when I think back about how this started with war bonds, you know, and I mean, it's growing into a behemoth, these treasuries, you know. Anyway, let's take a look at the U.S. dollar to close out the show. It's at 100.22 for the U.S. dollar, so it is up a little bit today. We could see massive problems coming in Europe because they cannot settle anything when they're in court all the time. Thank you guys for listening to the show. Give me a thumbs up, and we'll catch you guys in the next episode. Bye-bye.